Hello, I'm Christopher Haines, Head of Crude Oil and Energy Aspects. I'm going to take you through some of our views for 2024 and some key outlooks on the crude oil market. So if we start on the first slide, when we head into 2024, global stock levels are going to be very, very tight. So we've drawn down an awful lot of crude oil over the summer months. Over Q3, we were drawing crude at about 2 million barrels a day. Now we have seen some respite heading into October with some small builds, but heading into November, December, where we are now, we're expecting stock draws, and a lot of that stock draw to be led by Asia and notably China. So crude coming out of the market. This is important because China is one of the last places where stocks still need to draw globally, because we're already relatively low in the US and relatively low in Europe. So heading into 2024, we already start at a tight crude market, a low stock base, which is going to put us at a precarious position given the uncertainties of next year. I think some of those key uncertainties are going to be around geopolitical risk, which we've seen flare up recently in the Middle East with the Israel-Hamas war. At the moment, that is not priced into the oil price. We've seen a big reduction in the last few weeks. However, there is still a lot of risk around that aspect and for the potential for new areas of disruption. The other area is the global economy. And if we look at our next slide, I can give you an outlook on our demand projections. So, we're only expecting around 1 million barrels per day of demand growth in 2024. This is less than half this year because we had the boost of reopening from China. I think one of the key areas of growth next year is going to be in jet fuel. The aviation industry is one of the few areas that has actually fully recovered, and I think China will lead that growth as well. So strong jet fuel demand next year, driving most of the growth. Some of the other key areas we're looking at are the US economy, which is remaining relatively robust, but it will slow down due to high interest rates. That is starting to pressure consumer demand, and we are seeing or we have expectations of lower growth, maybe about 1.2% GDP growth next year, with the slowest growth in Q2 and Q3. So we are expecting a softer outlook, particularly in the OECD for next year. Non-OECD will drive the growth. So if we look at where supply will come from, this is on our next slide. Non-OPEC supply is largely going to be delivered from 3 countries. That's the US, Guyana, and Brazil. Now, the issues with this is these 3 countries all produce sweeter crudes. Yet, if we look at the refining capacity that's being built this year, next year, most of the demand for that is going to be sour, medium sour crudes. So we have a mismatch in crude quality, and we saw some of that this year because we have too much production of naphtha, not enough production of diesel, and probably too much fuel oil as well. But we're expecting that to continue and potentially even get worse next year because we're just going to have more and more light, sweet crude supply. So that's one of the issues heading in. We have a structural change in the quality of crude grades available. We also don't think that non-OPEC supply is able to meet global demand. So we will need either new production from or additional production from OPEC Plus, or we will need more stock draws. When it comes to OPEC Plus, this is on the next slide, the voluntary production cuts and the formal quotas will be in place to the end of 2024. So that is likely to keep supply on the sour side and on the OPEC Plus side quite tight. The key issue is what Saudi Arabia does with the voluntary cut of 1 million barrels, which it currently has out of the market. They have not made an official announcement yet as to when they will bring that back. So currently, December is the final month that this should be off the market. However, it's looking increasingly likely that OPEC Plus is aiming to keep global stock levels low. They are very, very concerned about the potential for a global recession next year, and also want to prevent any stock builds if there is a demand slowdown. So I think these are the key messages heading into next year, is that inventory levels will be quite tight. Crude demand will be limited to about 1 million barrels a day. The supply side is going to be restricted by relatively low non-OPEC supply growth, and this should give OPEC Plus a lot more control in the market heading into 2024. So what does that mean for prices? We remain quite constructive despite the lower demand outlook. So we see prices for next year largely in the $90 to $100 per barrel range. Notably, the strength should come in the second half of the year. I think first half of the year we might see relatively stable stock levels. If Saudi Arabia extends its cut, which is looking highly likely, then we could see stock draws even in the first half of the year. But Q3 2024 is likely to see the largest stock draws and the largest impact on price. So we are looking for slightly higher prices than where we are at the moment heading into 2024. Thank you.